Top Gun Options traders and investors. Matt Buckley, call sign Wiz, primary model portfolio manager here at TGO and the chief investment strategist of Wealth Creation Investing with your Wednesday market situation report, or as we call it, market sitrep. Came out with some interesting economic news this morning that might not bode well for the unemployment numbers on Friday. ADP non-farm payroll numbers came in very weak. 157K last, what was it, for October, and that was actually revised down a grand. 500-pound heads, the consensus was calling for about 129. That's a significant pullback in ADP jobs number, and we'd even come close to hitting it, 118K. Look at this, revised non-farm productivity quarter over quarter came in weak, and so did labor costs, folks. Revised unit labor costs quarter over quarter. Starting to see a little bit of a speed break stick out into this economy. So seeing some headwinds start to creep in here. We're going to see some factory orders and non-manufacturing ISM numbers coming out mid-morning, but these numbers aren't good, folks. And obviously, you know, the futures are ticking up a little bit this morning, but nothing really, in my opinion, to be happy about this morning on the economic front. Obviously, Thursday, we talked about we have weekly unemployment claims hovering around the 400,000 level, but Friday's the big day on the flight schedule, non-farm payrolls, and the all-important unemployment rate, that political football that's been kicking around. Like I said yesterday, this is what I'm really going to be looking at, especially based on some of the positions I hold in our model portfolio. Average hourly earnings and the University of Michigan consumer sentiment. We saw personal income and personal spending fall last week. Not good. So let's see how the average hourly earnings are doing. And remember, folks, that companies are racing. I fly around the world. I fly around the country, working with executives and all levels of organizations, from the Fortune 500 down to mom and pop tire store. And to a company, they are making some significant changes based on the fiscal cliff and also Obamacare coming down the pike here. So again, the media do a really poor job of reporting it, but I see what's going on in businesses. The financial media don't, and a lot of the 500-pound heads on Comedy Central also don't as well. So again, ADP print of 118K misses expectations. Manufacturing jobs declined for a fifth month. Not the best news. So we kind of had a mishmash of a market yesterday, and futures are indicating a little bit higher today. But again, folks, I'm a seller of any rally here. The main thing that's on my radar right now, the fiscal cliff. And let's take a look at our barometer as options traders here, and that is the volatility index, or the VIX. Take a look what's going on in the past 20 trading days here. Look at this. We at Top Gun Options, we trade the hell out of the VIX, and it's been doing this, folks. When it gets down around 15, 14, we get long vol. When it gets up to about 19, we get short vol. It's trading in a very defined range here. But look at this. Since last week, Monday, Tuesday, and we'll see what happens today. We've seen a nice over $2 handle move in the VIX. And this is kind of creeping up, right? We haven't seen any rip your face off corrections, recently, right? We've seen a couple, nice rallies that have caused the VIX to pull back here. But folks, the VIX is cyclical, and it's also mean reverting, right? But we're seeing a nice little uptick in volatility, and we have some good positions on here in our model portfolio on volatility on the VIX. We have a bear call spread out to December, 30 of them, of the 2022s, and then we're long volatility by selling a bull put spread, the 14-16. So this kind of goes to my strategic mindset of when the VIX gets around 16, you get long, and when it gets around 19, you sell it. So looking to capture about $2,500 in profit on those two trades. Apple, folks, got some great Apple positions, bearish positions on Apple that are turning around. We put them on as Apple started this little fake run. I'm going to call it a dead cat bounce. Let me go to the Apple chart here. And let's take a look at the past 3 months, because really we saw it. Obviously, you can tell I've been doing a lot of work with Apple here, but just the slide for life here. Everybody kind of said, all right, that's enough. 520 is kind of cheap enough for me, and got back in here. But we're seeing it start to get toppy right around here. This 580, 600 seems to be the new psychological level. When you talk about Apple, folks, Apple, people talk in round numbers. Apple 600, Apple 500, Apple 700. And when we hit Apple 700 right here is when I said sell. You get out. Apple hit 600 before it hits Apple 800, Apple 1000. Remember all the Apple 1000 people? Seeing a lot of stiff competition. I had a great live trade brief yesterday with my readers who we had a long discussion about Apple going into China, the iPhone 5 release this week in Korea, and the Apple fatigue, folks. So not a believer in this little bit of a rally here, and we put on some bear call spreads. Yeah, a bear call spread on the other day, and have some great positions working on Apple here that are getting ready to really come in because, again, you have to go counter trend, folks. What's Apple's currently priced at $575.85. What are we looking at for the quote today? It's open up 570. Look at this. So we're even going to see a bigger correction in Apple today. I have a bearish double vertical on that's about to get very, very profitable today. So look out below as far as Apple. Didn't believe this dead cat bounce that Apple saw when it hit 520, and not a believer in this. I think we're heading for another leg down on Apple here. So a lot of good stuff going on in our model portfolio. We have a wealth creation with options model, trading session today at 1 p.m. And also got to do some repairs on Facebook. Facebook's up 40% since, of course, I got bearish on it. Folks, Facebook sold. The PE, you can't even calculate it. It's in Stupidville. Let's take a look at the PE of Facebook, and I should have looked at Apple. I think Apple's about a 13. Look at this, folks. 255. It's got a PE of 255. Apple, folks, let's just go back to it. Let's see if I'm right. 13. Look at that. Swing 13. Apple has enough cash. Over 100 billion, more than that. They have enough cash to buy every U.S. aircraft carrier and every plane on board. There could be an Apple Navy. Maybe that's a better idea what they should do with their cash and take over the world. But folks, seriously, look at it. Facebook, my strategic mindset is extremely bearish. It's a Groupon to me. They can't monetize mobile. Period. Every time I look at my Crackberry and they come up with new and exciting ways to try and get me to click on an ad, it's physically impossible. I don't think I've clicked on an ad ever on Facebook. I don't think I've clicked on an ad ever on the internet. So do what they will. As a small business owner, I've given Facebook a shot at advertising. It's failed. As a large business owner, I've given advertising on Facebook a try. It's failed. I work with companies, large and small, who have tried advertising on Facebook, and it failed. It's Groupon, folks. There's initial flash in the pan, some initial activity, and it's going to fail. So this company isn't worth the paper it's printed on with 900 quadrillion eyeballs if they can't monetize it. And if the day they think about monetizing it with charging people money is the day it goes out of business, because Facebook Part 2 will pop up somewhere that'll be free, okay? And those people, of course, will think they'll be able to monetize it. So I've been wrong about Facebook. I put on some bearish bets a little too early. So you can be strategically right, but tactically wrong. So that means you lose a couple battles, but we're still going to win the war strategically on Facebook, because I think it's worth $16 on a good day with a tailwind, okay? So got to do some repair trades on Facebook. Other than that, everything else is looking pretty good in our primary model portfolio. Some gold positions taking a little bit on the chin, but that's fine because of what's going on in the market, but has some great hedges on, like an SDS double vertical spread that's bullish, but of course that means it's bearish on the market, and a couple oil positions and some other good stuff, some long-term diagonals on China and on Brazil. We have some RIM positions. RIM's made about 50% in the past month, so that's been a pretty good trade. So all in all, good stuff going on in the primary model portfolio. Stand by for an interesting rest of the week with the jobs reports. And obviously, folks, I'd be remiss if I didn't say the two words fiscal cliff. Who cares? As I talked about for a while in our live trade brief yesterday, as a result of the financial tsunami in 2008 and the government stepping in, we have a government put. That's what it boils down to. So people really don't care about the fiscal cliff because they know the government's going to print money until the cows come home to keep this system from collapsing. That is extremely dangerous for our nation and for the markets. So again, the Pope has come out and said hell doesn't exist. So it's game on. And that's what's going on with the fiscal cliff as well. To steal a George Bushism, I misunderestimated that the fiscal cliff was going to bring about a lot of volatility or an increase in volatility and a pullback in the market. Still might happen. You know who's being really quiet right now? The Senate. Boehner's kind of quacking. The president's quacking. The men and women in the Senate are trying to meet behind closed doors and say, all right, can we figure something out here? So if something does get figured out, which I assume will be some tax increases on the rich and we'll kick the can down the road on harder decisions, the market's going to rally. And I've already set up positions to take advantage of that. But my mistake, and again, at Topkin Options, first, we're very big on pronouns. It's I. Not we or you or anything like that. As a former fighter pilot, we debrief, and we debrief at Topkin Options to see what went wrong, what went right, and how we're going to get better and improve our future execution. That's the difference between us and just about everybody else on the face of the planet, folks. So going to take a hard look at what's going on at the fiscal cliff, get our sales positioned appropriately to get them full of wind and power through this thing to the upside when I fully expect to see a rip your face off rally in January and February. Okay, got to go. Got to get ready for the open here and look at making some money. Happy hunting. Make sure you hedge, and I'll see you with tomorrow's Sit Rep.